It's time once again, my friends. Welcome to the Dapper Dividends. I just made that up on the spot. Can you believe it? I can believe it because it wasn't very good. But you know what is good? That you're here, spending some time with me. Thank you. And that's the show, everybody. I'll see you again next week. And so long and good night. Now, I hope you're going to stick around. We're going to talk about some fun things, whatever you want to talk about. Are you working this weekend? It's Labor Day weekend. As of this recording, as far as I'm aware, it is Labor Day Eve here in the United States. So many people, including yours truly, do not have work tomorrow. Do you have work tomorrow? What are you doing? We didn't get invited to any barbecues or anything like that. But in all honesty, you know what? It's an interesting time because a lot of our friends, people grow up, people change. Did you know when people grow older, their skulls change? I know, crazy. The things you remember, why? I don't know. What does that have to do with the dividend investing? Probably a lot because we're always changing, right? You're never through until you're through changing, I think is something Martha Stewart said. My wife shared that with me. Very smart, I think. I'm in my pajama shirt. This was an old shirt, an oldie but a goodie, but it's been worn out. You can't really tell from the video. But anyway, so let me say hello to some of you people. Already a you people. I don't know, is Shamir going to make it? What did I forget? Oh, Janice, are you talking about the early time? No, I just wanted to spend more time with you guys and girls. Ladies and gentlemen, boys and girls, people of all ages, welcome in to the Dapper Dividends. Right, we're starting it over. So, I found an interesting chart. I've heard this number thrown around, and of course, I can't find the exact chart that it is, but it's political, right? People talk about the president and the Republicans or Democrats here in the United States. If you're not in the United States, this won't even concern you, and it's not even going to bother you that much. But here we are on the precipice of another election, and it's going to be okay. I'm telling all of you, it's going to be okay, regardless of who wins. Michael Swami, I call him Swami G, because during one of the Berkshire annual meetings, that's one that stood out. An Indian dude kept calling Warren Swami G. Really cool. It was a really, really cool thing. There he is, the Dapper Welder. I appreciate that. Thank you. I did work today. 8 hours. I worked at Amy Lou Foods in Chicago on the South Side. Shout out if that lyric popped into my head called The Torture Doctor is in. It's a Chicago band called oh my god, Matt Skiba's band. Someone help me out here. Matt Skiba. It's a Chicago Alkaline Trio. My goodness. It must be the eve of a weekend. Eve that I have a day off. Extended eve. Oh god, I love it. You know why I love it? Because we're alive. You're going to be dead someday. We're all going to die. But what matters most is how you determine that you're going to live your life. That is what's really important and critical. And all right, I'll shut this thing off. I don't know. What is this scrolling by in the bottom? I guess that's my unique financial disclaimer. So there you go. Be sure to not take financial advice from this guy right here. Sorry, there's some 80s loop for you. Fun. We have fun here. You got to enjoy it. You can't take life too seriously. If you take yourself too seriously, you're going to have a bad time, right? And, I see what Janice said I forgot about. I got, dude, Bernard. I don't think we've met before. How are you? Are you indeed coming to us from Jamaica? Kingstown, Jamaica, I think you're over in, right? That's the only town I know in Jamaica where we spent our honeymoon at Hedonism 2. Fun time. I liked it. Fast Eddie, my man. Any thoughts on TPR, PEG, and INSW? I can't think of any of those off the top of my head. We'll have to look at it. Who's my investor in Tyson? Jim Betts. We'll start with this, but we've talked about the much beleaguered CFO of Tyson Foods. He's the grandson, has a bit of a drinking problem, can't handle his liquor. Oh, and by the way, on a very serious note, speaking of people that can't handle their liquor, absolutely devastating news in the world of the NHL and hockey. A player that I have been a huge fan of, Johnny Gaudreau, him and his brother unfortunately, they lost their lives because of a drunk driver. The short of it is they were out riding their bikes. They were in town in New Jersey for their sister's wedding, and they went out for a bike ride at like 8:30 at night, and some drunk jagoff drinking in his car, aggressive. I gotta stop hammering this table. He he tried to pass on the shoulder a couple cars where they were riding their bikes, and that's it. That's it. And I think the positive thing to take away is, man, he was a really cool dude. Shorter guy, but everybody loved him. Had just a champion's heart, like so much grit, but he was such a nice person. And it's unfortunate, but we don't know when our time's coming. Right, what a somber way to start, but let's not be somber about it, because we're here right now. We still have this time. So anyway, yeah, what was I talking about before I led into that? Oh, the beleaguered CFO of Tyson Foods, which is the grandson, was finally, as you see, coming at you, Ian Lopik style on the screen. Here we go. As of August 30th, when this was published, I mean, you see that. John R. Tyson was suspended in June following his second drunk driving incident since taking the executive role in 2022. So if someone can correct me, I think he's had 2 drunk driving incidences, and he had the one where he broke into somebody's house because he didn't know where he was and passed out in some woman's bed, like naked. Yeah, come on, dude. After I read that, I was like, I don't care whose grandson he is. You can't have that. So from what I read in the article is that, yeah, the meat giant, which again, Amy Lou Foods. I was at Amy Lou Foods today. They make sausages and stuff like that. Sausages. The meat giant, they appointed an interim CFO, Kurt Calloway, and John R. Tyson remains with the company but is currently on health-related leave, according to a release. And he was suspended in June after he was arrested. Yeah, I don't know. He would have been out on his ass if you ask me. That's nutty. But anyway, so yeah. I don't know any of those stocks. Maybe we can talk about them. Maybe we could do a stock block where we'll check things out. Nice. We got Doc. What's up, Doc? You made it back. Chris, Lisa, Shamir. Yeah, when I say you people, I don't know when this started from, but Janice, I do play guitar. That is a knockoff. Not many of you are going to know this, but it's supposed to look like an Epiphone Les Paul. Or a Gibson Les Paul, but it is an Epiphone, which is like their own knockoff version for people that don't want to spend $5-6 grand on a guitar, and you want to spend $1,200 maybe. That's who that's for. Oh, Shamir, happy National Enbridge Dividend Payment Day. I don't invest in Enbridge, so all of you that do. Oh, Bernard, you live in New Jersey. It was in Oldstown, I think. It was a rural area, and yeah, that sucks. John, 369%. Is that earnings per share or free cash flow payout ratio? And yeah, man, I don't know. That's a weird one with 3M because everybody's gotten super excited what they've done, that they just have a new CEO. I forget the news that drove it higher. Maybe somebody can refresh my memory. There we go. Puckman. What's up, man? Down in Bradenton, Florida. Jeremy from Dividend Stockpiles in Florida. We had a nice little chat. Yeah, no, it's actually 3 lives, Michael. He destroyed his own life as well, unfortunately. Of course, this guy jumps on. I would have invited you on. Maybe you're over at the gym, right? Dude, a lot of you guys are here. It's just surprising. I thought maybe a lot of you would be out celebrating, most of us don't have work tomorrow. I did not see that article, Shamir, but I'm going to look for it because that's a real interesting one, and it just shows nepotism can run deep, and you get a really long leash sometimes when you have that. There he is, Jim. I responded to your email from the newsletter this morning. What's up? Of course, our friend Marcus. What's up, Mark? He's here. TSN jumped up. I would assume so. Yeah, it's sorry, Shamir, I love it. Do you play banjo? I don't play banjo. I'll leave that to the professionals like Steve Martin. This guy buying 237,000 shares of SPACs this week. I assume you're joking. If not, what is the share price for SPACs? I don't even know. Dividend dig cub. Did I say it right? Just plug your nose. And yeah, I'm going to show you guys, by the way, the 40 of you that are in here, I'm going to show you why. Now, I think I started out saying, right, before I go on a million different tracks, that we, how do I want to say this? I've heard a couple different people on podcasts use this number, and they'll say, if you would have put money in, or if you would have put X amount of dollars in like whatever, 1929, and pulled it out when there was a Republican president and then put it in during a Democrat president and vice versa, this is what you would have. And it's funny because the number, we'll just say, yeah, I'll make it up. I looked for 15 minutes. I couldn't find the chart that it must be behind a paywall. But we'll say whatever, 1933. If you had $10,000, put it in the S&P 500, which didn't really exist back then. Today it would be, say, 52,000 under Republicans, and under Democrats it would be 112,000. Like, you're like, wow, that's great. But if you would have left it in during both parties, it would be, I don't know, 1.8 million or whatever the number was. And the point of it is that, and I just spilled the beans, I just gave it away, but I'll show you the one that I used, and it is currently, for those of you joining in, I know, it's just my habit, I have to do that. It's in the show notes in the description below. Why? Well, because down below me, you see all the information about the video and things like that, so it's like the Brady Bunch around here, right? You point down when you're Cindy looking at Marsha. Was Cindy on top of Marsha? Keep your minds clean, people. Come on. Anyway, here's what I'm going to show you. So this is, I like this one because it's new. A lot of these were old. It comes to us from, shout out to, let me fix myself. I always do this. Give you more real estate. There we go. From Financial Samurai. And it's a lengthy article, but there's one chart I wanted to show you. This is what the crux of it is. You'll get the idea. But it's just like my guy Mike, the dividend guy, at the end of his podcast says is, stay invested. This is why. Look, imagine if you were to pull your money out during, Republican presidencies and then dump it back in during Democrats. The market has gone up and to the right. Presidents don't control the stock market. They can try to enact policy, but ultimately it's the Congress, right, that passes it. They control the purse strings. The president is just the executive. We have 3 branches, yada, yada. And there's also millions of, here you can see this started in 1933. There's infinite variety of possibilities all interacting with each other that are available at any possible second. And when you mix in all our human emotion with it, crazy things can happen. But when in doubt, zoom out and you look at this, it's just, if you put $1,000 in the hypothetical. And of course, I don't think this is reinvested dividends, but and this was as of 12/31/2019. $1,000 1933 would have been over $10 million in mid 2018. Even more now, because we know that it's just gone up and up and up. It's up and up and up and up. So if you want to look at that article, there you go. And then this I also shared. I love Visual Capitalist. Sign up for their newsletters. They have really interesting things. And of course, this won't go smaller, but this kind of ties in with cost of timing the market. So they do the $10,000, but they went from January of 2003 to December of 2022. And this chart here tells us if you tried to time the market, but you missed some of those big up days, what your investment returns would be. You would have 93% lower return if you missed the 60 best days between. And this is not that long of a time period. This is between 2003 and 2022. And then it just goes up for there. But the big one, check that out. If you missed 10 of the best days in the market, 10 of the best performing days, you would only have a return of 29,708 versus if you had just stayed invested, never touched your money, $64,844, which is just phenomenal. And that should tell you that don't time the market. You can't do it. And I love that little last number here. And again, this article is linked below. 7 of the 10 best days took place during bear markets. So even when we have a raging bear market going on, it still hurts you if you have money sitting on the sidelines and you miss some of those giant up days. And then they give the days, and the biggest one was October 13th, 2008, had an 11.6% return. So there you go. Those are a couple things that you can chew on, look over. I don't see my guy. Oh, he is Whiskey Tango Foxtrot. Yeah, you're the troublemaker, and they're pushing back on Jeremy, is it? Maybe you can clarify a little. But now, yeah, I'll drink to that, Shamir. Happy belated National Starbucks dividend payment. And make no mistake about it. If you're new and just catching this, dividends aren't free money. It's kind of sacrificing total return in the future for immediate income now. You don't want to wait on that capital appreciation. You just want income right now. So there's always a give and take, a push and a pull. But of course, when we reinvest dividends, and I know you guys, most of you already know this, but when you reinvest dividends, and I've shared that Hartford study, I don't know if I can Google it while I'm talking, but it is just, yeah, I will Google it. I'll Google it while I'm talking and see how Hartford, I can't, dividend growth. Okay, I think I found it. Oh, where is it? It's the Hartford Dividend and Growth Study. I know, I'm going to find it. I think it was Hartford. There it is. Okay, now I can bring you guys along with me to show you why you should reinvest dividends. Because it's, this is I guess I'll show you. We'll go from here. We'll go from the Google page. It's a very long and in-depth study. I'll put this in the chat when I come back. But there's one chart on here, and it was this one. Yeah, it was this one right at the beginning. The power of dividends and compounding. So $10,000, right? Starting with $10,000 in 1960 and then going to 2023. If you did not reinvest those dividends, you would have $796,000. Pretty damn good, right? But had you reinvested dividends from 1960, $5.118 million, $5.119 million. So, I went to Cook County. I was Cook County educated, and I know, I can confidently tell you that 796,000 is far less than 5.12 million. Yes. But it's a fascinating study. I'll put this in the chat in a second. And there's one more cool chart that they show on here about dividend growers and cutters and initiators. I know. There we go. Don't get dizzy. The S&P 500 index stocks from 1973 to 2023, the growth of $100. So if you take that 100 and you invest in dividend cutters and eliminators, you got about $73. Then they have dividend non-payers, just a flat, no change. Then there's the equal weighted S&P 500 index. So this is not market cap weighted where, the Mag 7 get 35 cents out of every dollar that comes into the fund. But dividend payers, $8,756. But for the dividend growers and initiators, check that out, 14. It's towering. So it just goes to show you that being in dividend growers and initiators is definitely a good thing. So there's that, everybody. As Shamir, you set me off on that with the... Dude, John, good. I'm glad you were. Get that exercise, people. I tell my kid, and that doesn't count, Shamir, because I didn't say tu gente. Tu gente? No, that's your people. Still didn't say it. But yeah, get out there, man. Get active. Be active. And everything we do here, it's right. It's on in front of a computer, but very interesting. ALB. I think you mean, what's ALB? That's not. I think you meant Albertsons, right? Is it ALB? ACI is Albertsons, I thought. I don't know. Clarify that. Hello, Bose. Thank you. Anybody going to see the new Beetlejuice movie? I don't know what to think. I loved Beetlejuice, but this one, I'll watch it. They'll get my money, of course. Oh, wow. So you did cash out. You really did buy that, Jim. Hey, you know what? If you don't have any other better option, why not? Why not? It's just this guy by Costco. Yeah, I think they're going to reverse split. I mean, don't you guys think they're going to reverse split? Yeah, Steve meant ACI. What did you ask about ACI? You had wanted to know... Oh, that they're near a 52-week low. Can we look at that one? Yeah, let's do it, man. And then I'll do news too, right? So we'll do some dividend news, cause why not? Ryan says the S&P goes back to the 50s, right? I think so. I don't know the exact date, but they figured out a way. Those Smarty Marty. I don't know. I was gonna say Smarty Smartersons, but and I think Smarty Marty is part of the Smarty Marty cohort, right? So they all figured that out, where they took the equivalent of the S&P 500 and built it all the way back into the 20s. So Steve wanted to see ACI. We'll take a peek at that. And after I get caught up, though, because we'll do ACI, we'll do news, and I'll do one of... Oh, who wanted to know about TPR and PEG? Isn't TPR Canadian? I can't find who asked that. We'll look at PEG because it reminds me of price to earnings growth ratio, yeah? Frank, man, just like in religion, a late conversion is better than never. So it's better you're late here than never, right? Yeah, Costco is priced high. I think they are going to reverse split, right? That's going to improve liquidity. That's going to help facilitate options, which, I did buy option. I bought an option. I gambled this week, people. I normally don't do this, but for those of you that watch, you people know that I don't go to the casino. I don't play the scratchers. Sometimes I will. I'll do maybe 2 or 3 times a year, I'll do a $1 scratcher to show my kids. I'll say, look at this. We're going to do a $1 scratcher, and I'm probably not going to win. And then I win $2. And I'm like, look at it. I got 100% return on my money. So Whiskey Tango WTF started positions in, Ben. That was, so you're following their CEO. I can't think of her name, but she bought, which I also followed a CEO that bought this week. I'll show you guys where to do that. Look at this dress. He remembers that Cindy was on the bottom. That's right. So the older kids were on top, right? I can't remember how it went. It was a grid. Let's see if my memory serves from the Brady Bunch. So I think at the top, wasn't there? No, because there was the mom and Mike was the dad. I don't remember the mom's name. And then, yeah, then the kids. And then Alice popped in, right? Or was Alice on the grid? I thought Alice popped in the middle, like at the end. Man, it's been a long time since I've seen the Brady Bunch. I don't want to play it because we'll get demonetized. But wait until 11 to talk about adult-related stuff. Okay, that's how far back I am. Yeah, we used to do. I did a few videos on that back in the day about what Nancy was buying. But hey, you know, why doesn't Buffett just buy S&P? He owns it. He hasn't sold it yet, right? Actually, we will come. No, we're gonna do this now. Whiskey Tango. Look at Tootsie Roll, dude. Tootsie Roll does a. They split every year. I think it's one for. Oh, what is their split? Every year they split their stock, and they've done this for many years. But, or is it a spin-off? Someone help me on this. I mean, there's so much stuff rattling around in my head. So Tootsie Roll has low dividend growth, but here's the catch. Here's the rub. You receive extra shares, or it's like a one for, I don't even know. It's a weird thing. So if you have, maybe it's a 1 for 100. I can't think of it, but Tootsie Roll every year does a split, and you get the equivalent if you have 100 shares of something like 3 extra shares a year. It's like a, I don't know. Somebody look it up. Shamir, you're good with that, right? Yeah, I guess I could, but it's too much stuff. You guys love it. I could just do this for hours. So if you take the current yield, which was always like 1% or just over 1%, and then you sell off the extra shares that you got. So if you had 100, I think you get 103. I think is what it was, right? If you have 100 shares, you get 103 every year. So you're essentially getting 3 free shares and the dividend yield. But if you sell those 3 shares, add that to the dividend yield, I think it's like north of 3% or something. But yeah, I don't know if Tootsie Roll is growing. They seemed okay, but we can do that. And Buffett does own, let's see what he has in the S&P 500. We will go to, let me pull it up first. This is over at 13f.info, right? Ryan knows what I'm talking about. You have to be on your toes here. All right, I'm going to share that. We're going to look at that real quick, my friend. I think that's what Mr. Kevin Burgess says. All right, so 13f.info, most search managers, of course, Berkshire's right at the top. And this will show you their quarter by quarter and the way we look at it to see what they did every year. So we'll click on Q2 24 and we compare that to Q1 24, and then that's what we talk about. But where's percentage of portfolio? That's not on here. You know what it is on? It's on the, you know what? So I'm going to give you guys a double dose of places you can, you know, spy on Warren. But this will tell you the change percent. I thought it said the percentage, but you know where they do have it is the, I'll share this. This the CNBC Buffett tracker. See if this comes up. Yeah, the Berkshire. I spelled his name wrong, didn't I? Oh, come on. Here it is. There we go. So if you go onto this, it will show you percent of the portfolio. Really nice sortable table. All the annual meetings. Good stuff. So it's at the bottom. Here you go. Apple. Look at that. It's only 28.8% right now. But We'll go down. And there it is. So it's a minute part, okay. But they do have S&P 500 in both SPY and VOO. And they have about $22 million of each that they have. But these are all the equity holdings. These are not all the businesses that they own. So touche, to your point, they're not buying it, but they still at least hold it. And, Warren Buffett's a different animal. I don't think any of us are like Buffett or Berkshire. Ted Combs and Todd Wexler. Yeah, no, Todd Combs and Ted Wexler. I didn't think that sounded right. But Michael, I always struggled with those symbols, but I think the 769K is less than. You know how, everybody, get ready to learn. Put your learning caps on, because they taught me, again, Berwyn, Illinois, School District 99, Cook County School District, mind you. But that number, they said, it's like a crocodile. The crocodile eats the bigger number, so you have it going the right way. So the crocodile's eating the 5 million, which means it's less than. The 769K is less than. And actually, that's all I had to know. Once I did that, they said, okay, now you can go to high school. So that's all we had to know, and that's that. We're going to look up Tootsie Roll. We're going to look up, what else did you guys want to look up? I know there was, we'll do PEG. I thought I missed one more in there. I apologize if I did. Put it again. I'm trying to stay more caught up with all y'all. I want to see if anyone answered my... Carol was the mom. That's right, Shamir. Cheers to Carol and Mike. I always looked for the spinoff. What happened with the people they divorced? What happened with their lives? They didn't get the kids. How come the kids never see the other parents? What's going on there? You know something funky happened, right? There you go. Alice was in the middle. I remembered. Look at that. It's been many, many years since I've seen that. The only Brady that Shamir cared about was Tom. Miss Brady was hot. Hey, I'll agree to that. I can't think of the actress's name. I can't think of her name. I was kind of partial to the, and of course I just forgot her name too. I just heard her in an interview on WGN, the mother from Happy Days. I can't, man. Shows you what here's me, all pimping my brain, like, look how smart I am, and then I can't remember any of this. Yeah, look at you guys. You guys are all a bunch of, and the thing I love about this, so, Rick, you typed this comment at 7:59. Oh, I'm 8:04. I'm only 5 minutes back. I'll, pat myself on the back there. So is it S-West or is it Swest? So Swest, thanks there. Kevin, again, I just got done telling Frank, like religion, a late conversion is better than never, and a late entrance by you is better than never. June Cleaver, oh my God, we're going off the rails here. Now we're talking about the beauty of apparently we have a beauty pageant competition going on between fictional, what do they call it? Not sitcom. Yeah, sitcom, right? Sitcom mothers. Yes, Florence Henderson. There you go. Marsha, God, look at you. This is funny. I know it's not investing, but, and we're just hanging out. And this is the beauty of the live streams, is we just have fun. We'll talk some stock. We're going to look at Tootsie Roll. I don't think anyone gave me the answer, but I think it is that. The cobwebs were blowing around back there, and I think we came up, for every 100 shares of Tootsie Roll, you will end up with 103 shares, because they do a split every year. It's kind of their thing. Marion Ross, there it is. That was the mother from Happy Days. Yes. Before Buffett's will was edited, the largest portion of his fortune was designated for I think didn't they rescind that or give that away, but he wants everyone to put It just S&P 500 because he says you're not going to be able to do what I did. Different time, different people, different temperament. So, by the way, I'm listening to Damn Straight, the audiobook that Janet Lowe wrote about Charlie Munger, and it's pretty good. I like it, but yeah, Charlie talked about one of the things you had to have was extreme patience and extreme decisiveness. And I think that's very interesting. And it kind of goes hand in hand with him talking about when you invest, you have to be like the spear fisherman or fisherwoman, the spear fisher person sitting, right? We're gonna be, who just canceled their DEI? Was it Ford? I think Ford just axed their DEI, but we're DEI here, right? Dividends, something and with an E and then something with an I. It was going to be good. When I think of it, I'll tell you. But you're like the spearfisher person sitting at the side of the river waiting for the fish. And you don't know how long it's going to be. But when that fish comes close, then you got to be ready to strike. You can't dilly-dally around. And now we got into Bewitched. I never got into. I liked I Dream of Jeannie better. Bose. We can do an Amazon. All right, there we go. Dresh got my. So I was right. I was right, everybody. For that, because I was right, we're going to go ahead and give myself 5 seconds of the the pre-programmed 80s background loop, everybody. Okay, and away we go. Why? It's my show. That's why. Okay, I'm caught up. Here we go. Now we're going to look at, we're going to do it in this order, everybody. So whether you like it or not, sit down, get ready. We're going to do what I bought this week. Then we're going to do the dividend news. And then we will do Tootsie Roll, PEG, and Amazon for my friend Bose. So how you like them apples? That was a good movie too. Was Good Will Hunting, right? Maybe I should watch that with my kids. So we're gonna at the conclusion of this live stream, we're gonna watch a movie, and we have trouble deciding. My wife and I love horror movies. Gotta watch that. We're kind of, hey, you down with the lifestyle? We like horror movies. My wife and I are late 40s. I have 2 daughters. One starting to get into horror movies. She's going to be 17 at the end of this month. The other one loves Harry Potter. Doesn't like horror movies. Likes the Adam Sandler slapstick goofy comedies. So we have trouble finding things to watch. And maybe Good Will Hunting would be a good one. I don't know. What do you guys think? Let me know while I'm doing all this stuff that I'm probably going to forget about. So here we go. Everybody, we're going to start with... I had to think, right? We'll start with what I bought. So this is also linked below. This is my newsletter I send out every Sunday. Yes, even though I was working at Amy Lou Foods on 44th Street in Chicago, near Kaminsky Park. That's a thing around Chicago. I don't know what is this guaranteed rate field you're talking about. When I go watch the White Sox, I go over there to Kaminsky Park, take Archer Avenue, down to Ashland. You get on 35th Street, and it dead ends. It goes right into Kaminsky Park. And you know, if you hit the Dan Ryan, you went too far. Come on back. The stadium's on your right. Old Kaminsky Park used to be on the left. It's a parking garage now. Garage key. It's a garage. Did he say garage? He did say garage. So anyway, I bought the Schwab Value Advantage Money Fund to park 4,000 of my TD cash. It's $1 a share right there, and it's treasuries. It's very, very low risk. But when rates start getting cut, it's going to come back down. So it's a pit stop. And this was a whole article just telling you it's a pit stop. And now to what I bought. $44.46. So too many fours there. It confused me. $44.46 in dividends from Starbucks. And then here's what I bought, everybody. Lo and behold, 4,000 of SVS. You can do it, buddy. Just read the words. 4,000 of SWVXX, and that's $1 a share, $4,000. By the way, it did not execute until after the market closed. So liquidity there, if you need the money in a matter of minutes, not going to work. Could take as long as 2 days. So that's something I should have mentioned, and I do regret. 75 shares of Enterprise Products Partners, ticker EPD. And I did this because on CEObuys.com, I peruse it a few times a week. I saw that their CEO, Mr. Teague, he's a co-CEO. He bought, I don't remember, I guess I can show you that, but one of their CEOs bought money. He bought money? No, he used his own money to buy. That's what happens when, you see, as I'm telling you that, I already started reading the next thing I bought, my gambling, and my brain it's overload. It can't do it. It tries. God bless the little brain. It tried to keep up with my demands for it, but he used his own personal money to buy shares of Enterprise Products Partners on the open market, and it's been 4 years since he did that. So we will look at that. We'll take a brief detour there, but then the last thing, one call option of Dollar General. They're talking about the consumers constrained and cash strapped. Their stock dropped 30% in one day on Friday. It was, right? Friday. Worst day ever. And I paid $80, right? So it cost me $80. I have until October 18th for it to hit $100 or it will expire worthless. But if in 2 days it moves up to like $92, then the $80 I paid for it, it's probably going to be well over $200. So it's total gambling. Don't let anyone tell you different. Options are gambling. You're betting on time and direction. You got to get those both right. And then as we navigate away from this to show you what Mr. Teague bought, you want to, I'm doing the wrong one. This is what I want to show you guys. CEObuys.com. You can go on this for yourself. Scroll to the bottom for free. You won't get alerts, but you can view when the CEO, as they say, we only show you when CEOs buy shares at market price. No bonuses, no stock options, no gifts. And then you just scroll down. And that's how I found, there you go. That's what we talked about with Jennifer Johnson from the Ben CEO. Is that her second one? But my EPD, sorry if this is making you dizzy. Look away. There it is. AJ Teague. So you click on the ticker and it'll show you all the recent one going back all the way. I think it does like 20 years. But AJ Teague, he's a co-CEO with Randall Fowler from EPD. And if you don't know EPD, sum it up in a nutshell. They're kind of like a toll road for energy. They let other energy companies use their pipelines and transportation from ports. And they do a little bit of selling of the finished product from what I understand too. But that's the bread and butter. They're like a toll road. But yeah, AJ Teague, man, he bought shares at $29.35, 4,180 shares. So there you go. And then he did a whole bunch of buying 4 years ago, right? COVID, when all that happened, September and March, like, look at him. He dude, just $11 a share. Good for him. And that's and what made me look like this was COVID, right? But look where he was buying before everything hit. Boom, right there. 5 years ago, he was buying at $25.47. So yeah, and then 6 years ago at $29.48. So, you know, you may make a case and say that the stock hasn't gone anywhere, but they have a very, very high distribution on that. And then, all right. So I'm gonna catch up with the comments, and then we'll get back and we'll go do the Simply Save news because I don't want to get too far away. I like seeing what you guys are, dude. I'm gonna remember this. Do you mean Maleficent, or is it Malignant? Oh well, it's horror, dude. I can't watch that with my youngest. She won't. She'll just stay in her room, and we want to do like a family thing. My kids are getting older, man. They're gonna be gone soon. So I don't want to say so as much. So then don't. Yeah, Obama called it Kaminsky. And by the way, it was Comiskey, Charles Comiskey, but you know, it was like when Mitch Trubisky, everybody here, oh, that Mitch Trubinsky. Shannon's into Sunoco, right? Nice. Well, family friendly, but try and get teenage girls to buy it. I think I'm going to be buying more EPD too. I really would have liked to see it a lot lower. I would have loved to buy more in the 24 range, but I guess that's what you do with it. You just collect the dividends, and when it drops low, you just buy more, right? Oh, thank you. I don't remember ordering tea. I got tea, everybody. I can't drink it yet. It'll burn my face off. Look at it. It's too hot. I didn't mean to put that on, Shamir, but I did. Good for you. Okay, so let me see if I can do this. So we got, maybe we can go through them fast. We got Tootsie Roll, we got Sunoco, we've got PEG, and we got Amazon. I got you guys. It'll be a stock block, right? Like our rock block. Wait a minute. Lawrence Welk. Man, my grandparents loved Lawrence Welk. Lawrence Welk and Glenn Miller Orchestra. I grew up with that stuff as a kid. I know, crazy, right? All right, Shannon, I will get that for you. So don't worry. All right, we got a lot. Your wish is my command. If I could quote one, Barbara. I almost had it. Who played I Dream of Jeannie? Barbara Hershey? Is that right? That wasn't Hershey. Was it Hershey? Rooster Coburn. I think you guys are... Remember, I'm working with teenage girls here. Come on. All right. Kevin, you ruined it, buddy. You freaking ruined it. I'm building up. We already saw that. We saw that. I'm almost caught up with you guys. Paolo? Wait, I gotta do no more lazy salutes, man. You get a crisp salute. You can't be averse to MLPs. I don't hold any of them in a brokerage account because I don't want the K1 that you get from an MLP, which is a master limited partnership. And it is a partnership. And why? Well, because they pass the distribution back to you. You're the partner. That's what we say. But yeah, it's in my self-directed IRA or my Roth. So I don't worry about the K1, but I do forget the number now. So again, I don't want to put the scrolling on the butt here. While I'm telling you this, just remember, I'm going to make a statement here. I'm going to make a statement. Can I slow that down? I don't know if there's a way to do that. Anyway, I'm not going to worry about it now, but you get a limit on the dividends received, and I believe it's per account. So it's either $1,000 or $3,000. I think it's $1,000 in distribution income. So if you own Enterprise Products Partners, you pay no taxes on $1,000 of annual distribution income. But on that first dollar, that $1,001 you're paying taxes on that every incremental dollar over that. So that's a wrinkle to keep in mind. But honestly, you're going to have a really big position to be getting $1,000 a year, I would think. Maybe not so big. I don't know. All right, we're going to go to Simply, let me hide this stupid banner. Hey, it seemed funny at the time, you know. Yeah, I'm caught up. Yeah, Barbara Eden. What did I say? Barbara Hershey? Who the hell's Barbara Hershey? Ah, good point, Michael. That if you hold until death, your heirs get a step up in basis. All right. All right, so here we go. And also ACI. All right, we got a lot. So I'm not going to do a very in-depth, deep analysis of these because I've got 5 on the list. So it's gonna be a stock block, everybody. All right. What is he trying to be a rock DJ with a dividend channel? Come on, guy, just get us our Simply Safe scores. Don't you worry your pretty little head. We're gonna get there. But maybe we'll do news first. We'll do news first because it wasn't that many anyway. And we got to scroll down to, we already did that. There we go. Start with Ingredion. By the way, I believe they are headquartered here in Illinois. They used to be Corn Products International, I think. My old company, we used to work there. Smell like, very unique smell, but this is one that I had looked at before, and I forget why I didn't put it on the watch list, but they do food additives, all kinds of ingredients for foods. They raise their dividend a token 2.6%. Matthews, I don't remember what they do, but apparently it's diversified support services. Take from that what you will, and they were founded in 1850. But, oh wait, Matthews International. Don't they do something with crematoriums or cemeteries or caskets? Yeah, they do something, I think. This is coming back to me now. I think Matthews does something with the crematoriums or urns or something, caskets, excuse me. I might have to remember to look that up. Unless somebody's bored and they want to look it up. Now this is interesting. Look at this, the logo for Lamb, which is a very nice payout ratio. Well, we'll finish this. 15%, their 11th consecutive year of dividend growth. Semiconductor materials and equipment, out of my circle of competence. They refreshed their outlook on Merck. Dividend safety score of 99, very safe. They downgraded Advance Auto Parts again. This is one we sold way back. I had started a position because they gave a really big dividend raise. And then when I saw that, here, I'll show you instead of just telling you because we're on a visual medium here. So look at those dividend rates. They were raising that dividend gangbusters. And Daddy over here, yours truly, oh my God, they're down to 4. People, I was buying this right around $200 a share, I think. Oh my God, is it? Actually, it might be a good arbitrage, or not arbitrage, but dude, they're getting low. They might be, what's their market cap now? 2.69 billion. They might be a takeover candidate, but anyway, I'll show you why I got out. Right here. I got out here when their payout ratio went over 100%. I looked back and I said, wow, historically it's been under 10%. And then we see 10%, 25. I think I got in 21. And then when I saw it over 100%, I was like, nah, I don't got a good feeling about that. And then sure enough, boom, when you see that massive free cash flow payout ratio. Anyway, so that is why I got out of Advance Auto Parts. And last one, Douglas Dynamics got a dividend downgrade from 60 to 50. But the fun thing before we get into the stock block, look at this logo for Lamb. And then look at the logo for suspiciously similar to, I wish I did a side-by-side, Albemarle. Look at that. It's a triangle with 3 lines or so. And then Lamb, we got a triangle with, 4 lines. So very interesting. And now, what you people drink have all been waiting for. In no particular order, well, I guess we'll start with PEG. Public Services Enterprise Group, multi-utility. Maybe make that a little bigger. So you guys just take the dividend safety score here, 99 dividend safety score. And we'll look at dividend growth too, get some numbers there for you. But as far as the metrics, I don't know. You want to see it, sign up for Simply Safe, do a 2-week free trial, and then cancel. You know, do research to your heart's delight, I guess. Yeah, so there you go. Kind of slow, kind of average growth is what they're saying. And anyway, looks like it might be a little bit overvalued. So that's one of them. And we will do Tootsie Roll. And I know it checks boxes, but the dividend growth is slow. But again, yeah, 1.21% yield, as we were kind of saying. Another 99 safe. Dividend growth, it's very slow, but they do that split every year. So if you sell those shares, which of course, if it's in a taxable, you're going to get taxed on that sale, assuming they went up. 58 years dividend growth streak. And yeah, just very minute dividend raises. And the dividend yield is currently 14% above its 5-year average. And I think their payout ratio is low. Yeah, very, very low payout ratio. Well, not Visa low. Okay, next up, Sunoco for Mr. Shannon. Got yourself a dividend safety score of 50, borderline safe. I'm guessing you're chasing that yield of 6.47%. I guess this would be an interesting one because let me look at the taxation. I don't believe this is an MLP, right? I think this is the dividend's pretty much been flat. So you're getting that high yield, but you're not getting any dividend growth. Oh, it is a K1. Yeah, so there you go. If anybody wants a little more information on K1, pause it. So can trigger tax liabilities. I wonder if they... Sorry, I know. I was looking for that number. Maybe one of you know. I think it's $1,000. I know this is great, right? Watching this guy's... Anyway, Simply Safe. This is all free, too, this whole thing. This, here, I'll tell you what. You want to read about this more? I'm going to put that in the chat. So this is what I was just looking at right there. Or we are looking at. You guys are still looking at it, I think. All right. Anyway, that's K1. So you get a K1 with Sunoco. And, yeah, it looks like it's just okay. Middle of its 52-week price range. Again, that doesn't tell us anything about the intrinsic valuation of it. The DCF payout ratio, plenty low, so they can easily pay that dividend. But there you go, 50 borderline safe. And what do we got? Oh, 2 more. Albertsons. Got fat Albertsons. No, that's Sanford and Son. What song is that? Yeah. I watched Sanford and Son. All right. Albertsons. Ticker ACI. They are embroiled in a legal dispute over their merger. It looks like it's trying to be blocked. Will it go through with Kroger? I don't know because I'm not psychic. So I think it was in the 1800s, right? 1860 in Boise, Idaho. Look at that. Yeah, they paid. I had 10 or 11 shares, and I ended up selling out. But so yeah, they've frozen that dividend as of now. Why do they don't need to raise it? They're gonna potentially merge. So yeah, it could be. Dividend yield is 12% above the 5-year average. But once again, it's come down. I sold in the $21 range, I think. So this is one, I don't know, maybe you're going to do the arbitrage play, which I think after they paid out the special dividend, I think it was like $25 or $6 a share. So there's an arbitrage play in there for sure. But again, if it doesn't go through, it may still be a good company to buy and hold on its own. But I think the market, everyone's just in a holding pattern with it now. And then my good friend Bose wanted to do Amazon, which of course doesn't pay a dividend. I haven't looked at this in a minute, but yeah, look at their free cash flow per share. They hit that rough patch, but it's just up. It's still going up. They're solid. This is what you want to see. Oh, this is interesting. I didn't know this, but they're still diluting shareholders a little bit. Not much, but 10.6 billion shares outstanding. So, they're just okay. Maybe they're a little expensive now. Not a lot of debt. But I don't know. I feel I have enough exposure to them in my, my mutual funds, right? All right, let me take a sip of the tea. Yeah. What are we at here? We're at an hour. Look at that. We got 30 minutes to go. So I do apologize last week. I started 15 minutes early, and I saw an hour on the counter. I was like, ooh, we're at an hour. I went upstairs, and my wife was like, you're done already? I'm like, yeah, I'm done. And I saw the clock. It was, 8:45. I was like, oh, wait. I ended early. Lam is a good one. I have never looked at them much. I looked in the semiconductor equipment companies and when I owned Intel, and I just had to say, I guess I kind of got the same feeling a little. So TD is a little bit easier to understand, but there's just so many moving parts to a Toronto Dominion Bank that I'm literally buying the past, saying they're one of the biggest banks in Canada. They're one of the big six, and they're solid. They've been paying they've been paying an uninterrupted dividend for almost 170 years. But look at this. So Pat, your EPD income is $1,507 per year. If anyone can Google that, or I guess I could have Googled it, but yeah, I'd love to know. I'd love to know what that is. I swear it was 1,000 on that one, not total, but from the company. Frank, you closed Kenvue and Cisco, focusing on total return and reducing holdings. Yeah, I've done that too. In the Damn Right book on Charlie Munger, one of the things that he talked about was and this all centered around when they owned like diversified retailers, blue chip stamps. They had a position in Westco. If you looked at the ownership tree, it was very convoluted. It triggered the SEC to a full-on investigation. I mean, they were anyway. So Berkshire, that's how it got so big. There was a lot consolidated into Berkshire, and they sold some stuff off. But yeah, Charlie said when you simplify things, it can improve future returns because you're more focused on less things, I guess, is what he was saying. But we did what was I don't even remember it. What was the SSD? I know he said on ACI it was 50 something, right? 60, borderline safe. Yeah. Let's see. MLP have tax advantages not in a Roth. So explain that. How is the tax advantage in that? Because you're taxed at your ordinary income tax rate, right? Plus you get the K1 if it's in just a taxable brokerage account. I hold it in the no, seriously, flesh that out, man, because I hold EPD in the Roth and we don't get a K1. But yeah, from what I understand, it was like $1,000. As long as the distribution income is under $1,000, you don't pay any taxes on that. Barbara Hershey was a love interest in Hoosiers. I don't think I've seen Hoosiers. So why is this? What am I missing here with the EPD and the IRA is a no-no? George or Jorge. Seriously. But that's what I understood. Like, I mean, school me if I'm getting something wrong. I'd love to know, From everything I researched and learned, that's what I understood it as. And I've had it in the Roth for, what, 3 years now? Sam, what's going on? Sam from the land down under. What time is it there now? Tootsie Roll recipe. I love this. Yeah, it requires a day's candy to be incorporated in each new batch. Theoretically, there's a bit of the first Tootsie Roll in each piece of new candy. Yeah, I love that. I mean, it's probably not true, but as long as they've kept that tradition going on, right? Hey, what's up, Prez? Hi, how's it going? Good to see you, man. You know, you and Lisa, you have your live streams at the worst times for me because I saw it today. I was working. I'm in, it was a madhouse in this Amy Lou Foods, which has anyone had? They sell it at Costco, Amy Lou Foods. Yeah, next time you see the package, flip it over. It says Amy Lou. They have smokers there that I should have took a picture that you can probably, it sounds odd to say that. I don't know, better analogy. You could probably fit about 2 cars inside of each one because they're smokers, right? Just big. So, yeah. Yeah, it was an interesting place. But anyway, I was out there working and they were shut down for yesterday and tomorrow. No, today, Sunday, and tomorrow. So they're doing all this work. And that's an interesting thing to see a business like that. I mean, they had, electricians, pipe fitters. They had us replacing these clean roll-up doors. They're like high-speed roll-up doors for like food production areas. I mean, they had just conveyor belt company that it was just, there was all these contractors there doing all this stuff. Painters, it was nuts. But hey, I got 8 hours of overtime today, so I got to work with my brother-in-law too. Oh, hey, what's up? I did it, man. I forgot your name again. Oh, it's going to hit me. And I told myself I wouldn't forget your name. You're out there in Hawaii. Eric, right? Is it Eric? Tell me it's Eric. Please tell me it's Eric. All right, let's see. Oh, what's the big no-no? Tell me why. Explain it. Because I've held it there for 3 years and I have not gotten a K1. So tell me what I don't understand about EPD. I'm being serious. Right. Okay, it's a return of capital on your units. It's a distribution, right? They're passing the profits through, right? We're partners with them. So I understand that. It's a distribution, but yeah. Oh, Sam. Happy birthday to you. I don't know. I don't want to sing. That's corny. I'll just say happy birthday. See, I love these talks. So yeah, until you receive the return of 100% of your capital. So I'm serious though, Whiskey. Like explain it to me why it's a big no-no. Like you've said it twice. Like let me know why it's a big no-no, because I've had it for 3 years in my IRA. I've never gotten a K1, and I just, from what I understand, the research I did, you pay no income on the distributions until that first dollar, I think over $1,000. So why? And because it's, as it was said, non-qualified, then you would be paying your ordinary income tax rate on it anyway. So that's the way I read it. If it's in a taxable brokerage account, you're paying your ordinary income tax rate on it, and you get the extra gift of filling out a K1, which can be a bit of a pain in the butt. So I'd like to know what I'm missing there. So I hope you let me know. Oh, happy birthday to you. Happy birthday to you. Happy birthday, dear Sam. Happy birthday to you. Little bit of vocal fry there. Mark, dang it. I do apologize. Thank you. It's been a while since we've chatted, man. I've been a bad YouTube watcher. Like, life's so busy, right? Life gets so busy. I I don't know, man. I watch when I'm driving. I'll throw on like an Ian video, PPC Ian. My guy Ryan, don't tell him a lot of times I scrub. I feel like I talk with him so much, I kind of know what he's thinking, so I'll scrub through his videos and, uh, you know, I'm still looking. Where did you go, whiskey? Please let me know, because if I'm missing something, I want to be able to correct it. Like I am dead serious. I'm only human. I'm not a professional. So if I'm missing something, if I misunderstood it, I'd like to know so I can look into it and see if I am indeed wrong and if I should not have it there. So, I keep doing it. What a nervous habit. These heavy what did I say? I need like a pillow top here, right? Oh, better than Marilyn Monroe. Well, I didn't want to do the ordinary regular happy birthday. I couldn't sing it in a Aussie accent because it's I don't know, when people from down under sing, they sing kind of like Americans and grouse lippy. I know I'm stretching. Now I am stretching for slang I remember hearing when I was down there. Grouse lippy was something. A fag, bought a fag, right? That's bum a cigarette. And pissed. If you're drunk, you're pissed. So it's terrible, right? You got a guy from Chicago doing a Australian accent. Why? Because he was there for 3 days when he was 20. So if anybody, who else could do it better than that? And as we talked about, Sam, she said, "Did you go to get to explore when you went here?" I'm like, "Oh, we explored. Oh, we explored. we explored. We explored the casino. We explored nightclubs / dance clubs. We explored bars. We explored a couple gentlemen's clubs, and it was that's what 20-year-old sailors that didn't have a wife, didn't have a girlfriend at the time, and we were on shore leave." You can cut me some slack, but it was the older guys, the married guys, some of the my shipmates that were in their 40s, like my age now. They took excursions. So before you pulled into a port, they would have a sign-up sheet for excursions, and it would cost money, but it would say like Outback excursion, and it would say 8 hours, $50, whatever, and then you sign up and you pay, and then you do that. So, yeah, anyway, so I didn't do any of those because that's why. Well, then email me, man, russ@dapperdividends.com, or whatever, respond to the whatever. Let me know, because like I said, man, I'd love to know. I'm not the professional expert. This is a passion of mine. This is a hobby. I love it. So please, anybody, let me know. And Jorge, I will look into that EPD for both. If you can, send me the link. Yeah, let me know. Well, don't worry, man. If you're driving, don't worry about it. But unless I'm missing something and somebody from the government's going to be in touch with me, we've done 3 tax filing sessions, and as far as I'm aware, I've not received a K1, and I've not done a K1, so therefore I haven't paid any taxes on it. But yeah, that's here, let me go. So Steve says, you may own MLPs in your Roth, but there are some potentially unfavorable tax consequences to doing so. IRAs are subject to taxes on a special type of income called, the UBI, the unrelated business tax. So, or UBTI, I think it is, right? Or whatever, UBI. Well, yeah, I guess I'll have to look into it more. I mean, maybe I've missed something and I've slid under the radar with this. And as Andrew says, so the return of capital becomes taxable at sale and then becomes capital gains. Is it because I haven't sold any then? I don't know. I did have ET. I had some shares of ET that I sold. Well, I don't know. This is something I'm going to definitely be looking into because now you guys got me. You guys got me thinking. I mean, I'm going to have to revisit it and do some homework because if I've missed something, then I want to know about it. To avoid oh yeah, Paulo, you asked about who holds Walgreens still. So my kids, the Walgreens by us, I think they call it the ghetto Walgreens. And it's, I'll defer back to Joey Agree in their last earnings call for Agree Realty. They have, and I know I shared this before. I don't want to fumble around and try and find it, but they have showed how they started about 10 years ago selling off and divesting and getting away from their Walgreens properties because, as Joey Agree said, his team found that Amazon, dollar stores, Target, Walmart, most of those places you can get what you need that you would find at a Walgreens. So he thinks their moat was gone. It was evaporated. And that's, I could see them going away just because they've been around for 1901, I think is when Walgreens has been around. But they can go away. If something can end, it will end. That's a famous quote from someone, I can't remember who said it, but if something can end, it will end. And, that's interesting. I'm going to reread because I just saw this up here with I'm looking at, sorry, now I'm reading this World of Dividends that Simply Safe did. And it's a really long thing, and it's all about, the UBTI. So no, there it is. Hold on. Let me bring you guys with this and show you this. And, for anybody that wants to know, I put this in the link, the tax guide. So it says MLPs, right, in tax-deferred accounts, why it might not be a good idea. And they think Tax Advantage can help them avoid this mess. And as I'm scanning, I think the part that I saw was the other issue is unrelated business taxable income. UBTI is basically any gross income derived by any organization from an unrelated trade or business regularly carried on by it. It says it was created by Congress. Here, if the amount of UBTI generated by all of your retirement portfolios exceeds $1,000 per year, then you must report it. In most places, the planned custodian of your IRA or 401k is the taxpayer and needs to pay the tax by withdrawing money from your account's funds. Some custodians charge high service fees for this task, reducing the appeal of MLP ownership. So that's what my understanding was, that as long as I keep the UBTI, I guess, as I was calling it, the distribution, if I keep that under $1,000, then I'm in the clear. I mean, maybe I'm wrong about that, but and then that's here. So while most MLPs generate negative UBTI most years, if there is a major asset sale or merger, then a substantial amount of UBTI can be generated and thus result. So essentially, if they were to experience a big capital gain of the business, like if EPD were to experience that, then that would get passed through, I think is what you're saying, right? And then that would push you over the $1,000 because it would probably be broken down, right, on a per share basis. And then that per share basis would be the UBTI. So I guess then you're right, that would be different than the distribution. So I think maybe not, but there you go. I'm going to reread this, see if maybe I was missing something, but I think that answers a little bit of it. So does anyone disagree? Did I get that wrong? Does anyone have a different opinions? Now there you go. That would be a good topic. The MLP, ETFs with no K1s. Okay. But that still has to be passed through somewhere. So I would assume maybe they have higher expense ratio or something to offset that maybe. Yeah, Jim has ET, EPD, and Enbridge in his IRA. Hasn't been a problem yet, and hasn't sold any either. Dread Raider, what a name, man. Yeah, I don't know what that's from. That's not from any. Did you make that up? Yeah. Okay. Well, there you go. So then that's the deal then. So then I just haven't experienced any UBTI, right? I haven't experienced a UBTI that pushes me over the $1,000, right? So yeah, I guess that's something to think about. Maybe if you're building a large position in EPD or any of them, because it said it was all of them. And shout out to Simply Safe. Like, how awesome is that? And again, I put that in the chat. At the end of this, I'll put this in the video description. But yeah, okay, that makes sense. So with the K1, the UBTI will be designated as a separate amount within your distributions. So then they break it out. So it will show you the distributions and then the UBTI. Now, is it a combination of those two, or is it just UBTI is over 1,000? Let's see. No, this just says if the amount of UBTI generated by all of your retirement portfolios exceed. So I was there, man. I mean, I was in the ballpark. It was a little bit fuzzier for me, but I mean, I had the right idea that I know I don't want to have a massive position in EPD. I mean, I just wanted a couple hundred shares, right? So I love it. And this is what I love. And you know, everyone, I always say that challenge me on everything. Challenge me on anything and everything, because I don't want to live in an echo chamber, but just don't be a dick about it. Like, if you know, you can tell somebody that you think they're wrong without saying, like, you freaking jerk, you're wrong. You know, there's a better way to do it. Not saying any of you were, but I don't want to live in an echo chamber, because if I'm wrong, I don't want to hear the echo of things that are wrong, right? Like, this is what I'm like. And I've thought about changing that. I don't know. You got to have a tagline, you know, becoming better investors together. I kind of do believe in that. I feel that I'm learning things, sharing it with you, and hopefully that you're going to share things that you're learning with me. And if I'm wrong about something, I want you to tell me, because then we can all improve. We can all learn. We can all grow and be better, you know? We can all be better and have a better name like Dread Raiders, Warcraft name. Did they make a Warcraft name? Either somebody's doing fireworks outside my house, or World War III is getting underway. DIA. Roberto. Let's look at P-Nice. What is P-Nice? I'll type that in. Do you have a ticker on that? Is it PDBC? What is P-Nice? I know you're driving, Whiskey, but let's see. DIA and P-Nice. I'll do DIA. DIA isn't ringing a bell. So let me share that screen with y'all. All right. DIA. Oh, it's the Dow Jones. Duh. Duh. What was your question again? Said thoughts on DIA. It's kept up with S&P 500. Honestly, I think. Let me put that back on there. I think it's antiquated. I mean, I think it's antiquated. It was built to give the average investor a daily kind of gauge, right? It was built by Charles Dow and, was it Edward Jones? I think Charles Dow and Edward Jones, maybe, for the Dow Jones Industrial. And there was a third guy, and he had a long name. It didn't flow as well, but it was for industrials. Like, that was the tech companies of the day when they came out with it, and it was to kind of give people a gauge on how the market was doing. But now it's price cap weighted, or price weighted. I might be saying that wrong, but Yeah, dividend growth, because it's got a lot of blue chip industrial. Well, here, let's look. Let me go to Seeking Alpha. Oh, by the way, here's the week ahead, everybody. Sounds like Harry Carey. Here's the week ahead, everybody. The U.S. auto sales. Let's just see what earnings we got going on this week. Dollar Tree is going to report earnings. So there you go. I'm sure the puts for Dollar Tree went up. The price it takes to buy them, given what happened with Dollar General. But anyway, I'm not seeing anybody. Dick's, Dollar Tree on Wednesday. Casey's General Stores. Boy, here's the hope, and they have a horrible earnings, and their stock just tanks. Love to get into them. Oh, that'll be a fun one. NIO, for those of you that know, the Chinese EV car company. And I don't know, Volatility Watch, IPO. All right, that's it. I don't know. A bunch of other stuff. Dollar store drama. All right, what were we looking up? Oh, the S&P. I don't even, or Dow. I don't even know it's in the Dow anymore. I know PepsiCo's in there. Let's see their top 10. Or this will show all of them. Yeah, their top 10. United Health, Goldman Sachs, Microsoft, Home Depot, Caterpillar, Amgen, McDonald's, Visa, American Express, Salesforce. There's 31 holdings. So I thought it was 30. Anyway, I don't know. We're not going to dig into into that, but P-Nice. I don't know what P-Nice is. There he is. Yeah, it's based on price. Thank you. And that's what I was getting at. I don't know. I said price cap weighted. So the stocks that have the highest share price will be toward the top of the index. And that's why when Walmart did not a reverse, but when Walmart split, whatever, it cut their, what'd they do, a 3-for-1? Cut their share price in third? Whatever. I'm bad at math. Anyway, it bumped them down from, we'll say, like the number, I don't know, 14 spot to 25 or something, because it's price weighted. No, I don't invest in Bitcoin. I have a little bit of Bitcoin left over. I don't know, probably like $15 worth that I don't know why I'm holding it. And then some XRP. I'd been heavier. You guys, there was videos I did back in the day where I got burned by Celsius because I heard of it as getting your crypto dividends because they were loaning it out. It was a mess. It was a mess. Oh, peanut. I gotcha. No worries, man. Now I gotcha. Hey, it's almost time for Daddy to have a couple drinks and watch a movie. And where are you going to see future of TSN? I think they'll still be around. I don't think Tyson Foods is going anywhere. I think they just got a bit of a monthly something. As I'm reading monthly dividends. Yeah, I don't know. I'm gonna stay away from them. But dude, Menards. I wish Menards was a publicly traded company. But John, if you think Tyson is gonna be fine in the future, what better time to buy than now when there's a lot of clouds and people are down on it? That's the best time to buy. Was it me that said I would look to start a position in Costco at the right price? Yes, it was me, and I was kind of using their 5-year PE to get just a general gauge, and it was 570s to 590s. It's almost double where I'd like to buy it at, and I don't know. It's crazy. I keep saying, how much higher can it go? It's apparently going to go past 1,000. I think they're going to reverse split. Or I keep saying reverse split. Reverse splits are bad. That's when companies want to make their share price higher because they're looking at getting kicked out of an index. Their share price drops below $1 or $5, whatever. I think $5 is NASDAQ, and if you're below $1 or $5, I think, on NASDAQ for 30, 90 days or something, then you get booted. So companies will do these reverse splits, meaning that they'll do like a 1 for 10 or something. So if you have 100 shares and the stock price is, $10, then you'll get 10 shares and it'll be $100 a share, I think. I may have done that wrong. I went through it with Aurora Cannabis and it sucked. There he is. We were talking about movies, man, and everybody said you got to watch The Last Dragon. I was like, you mean Bloodsport? And they said, no, like Craig said, Last Dragon. A DG Market? What the hell is a DG Market? I don't even know. That's a Dollar General Market or something? There you go. Now you answered. It's a Dollar General with a grocery store attached. Well, that's very interesting. What would you guys do? Dollar General just took a dump, so would anybody buy it? What are your thoughts on the Capital Group ETFs like CGGR and CG? I have never looked into any of those, Alan, so I will have to say I don't know. I've never looked into them. But if it's a Capital Group, is that like, let me see, CGGR, just for I'm going to do an abbreviated here. Yeah, Capital Group Growth ETF. Well, dividend yields 0.35%, but it grows fast. It is, they invest in public equity. So do they just pick stocks? It seeks to benchmark the performance of its portfolio. So what does that mean? I mean, it just sounds to me like it looks new and they just try to beat the S&P 500. That's their whole thing. Ooh, Lego. That's an interesting one. What companies would you like to own that are not publicly traded type thing, right? ABR, FTVV, ABR is not in my wheelhouse. Mortgage REITs, the M REITs, not at all. But their CEO, Ivan, I can't think of his last name, but he bought more of their stock, right? So, hey, you could buy, sorry, I just saw tequila. So, mostly, unless it's some very, very special occasion, this guy right here is not slamming much of anything. I do enjoy sipping on whiskey, right? I like some bourbon, Kentucky bourbon, but yeah, dude, tequila, those days are, boy, put it this way, if I never drink tequila again, I think I'll be just fine. But Reverse Morris, no, that was the spin-offs, like AT&T, I think, did a Reverse Morris. It's to keep it's for tax efficiency. I don't remember exactly what it is, but yeah, that was the spin-offs. Just by Walmart. Yeah, I could see Walmart putting them under, but the thing that Dollar General serves is that they are in these little towns, right? Like I worked in Niles, Michigan on Wednesday, and I passed two Dollar Generals. It's like farm field, tiny little town, Dollar General, farm field. So yeah, they kind of go where stock move over 90. Yeah, you know what, Jim? I had owned NEO. I got stuck trying to sell a covered call on it, and then I got stuck because I couldn't get out when it was up. And yeah, I don't know. Shamir, Mars, and I just noticed the time. Look at that. It's 9 o'clock. Freaking an hour and 33 minutes. I love it, man. Look at that, how fast that flies by. 3M, last one. You have it. It was red bad. Now I'm up 10%. I'm still skeptical. We talked about 3M because on their last earnings call, their CEO said that it's going to take a while for them to turn around. They have products that are lagging. I think he said tired. They need to innovate. They need to spend more on R&D. They're still dealing with the tail end of the lawsuits, the the PFAS, forever chemicals, and then the earplugs. So I think people got a little too excited and just kept buying. And I think a lot of people see that it was over $200 a few years ago and just thought like, hey, we're at 98. Let's go, $100 upside. So I think it's gonna come back down, but I don't know, maybe not. You never know. Roberto, dude, you are right. And it's so funny because now you always think that farm fields, it's like farm fields, Dollar General, more farm fields. The Last Dragon, one of the greatest of all time. So we'll see. Sam actually bought, no, we're neophytes, yeah? I did the same thing. It was 2018. They IPO'd in September of 2018, and I bought Neo. Too much. Kept buying more. It was one of the things I've told the story that, yeah, well, again, but hey, and I'm sure I've been guilty of it, but I try not to tell people like, you gotta buy this, it's going to the moon. Personally, I think someday that Nexstar will be over $300 a share, but I just can't, because I could be wrong, but it would feel so weird for me to say, this is gonna happen, you gotta do it, buy. I'm more like, hey, I could be wrong. I think I have a very good feeling that it's gonna be over 300 someday, but it could also be indigestion, right? So who knows? Again, you're the ultimate person in charge of your money and your finances, and it's always going to be up to you with what you do with your money. So, and hey, and what you did tonight was watch a little bit of me and hang out, and I'm gonna go see if we can find now what we're gonna watch. I'm gonna have a few drinks, and hey, enjoy tomorrow if you don't have the. Let's start that again. We're landing the plane, and we're landing the plane, and we're telling everybody that they're going to have a good day tomorrow. It's going to be beautiful because you're alive, and make the best of it if you can. And if you do have the day off, enjoy it. And I will see you all again in the next video and live stream. I really do thank you for spending a little bit of time with me. I do appreciate it. So, hey, go enjoy yourself, everybody. I'll see you in the next one. Bye.